What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It's time to party, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week we had earnings from Apple drag down the broader markets. We had Amazon earnings send that stock higher, and we are in a new room, and there is a very large echo in here. I hope it doesn't bother your listening experience on this Friday. That'll get better as we fill this room up. Let's kick things off like we always do with Meta Platforms. Start of the week at we'll call that 325, down over 4.3%. To finish the week close to $310 per share. The company and Ray-Ban have made these eyeglasses that go on your face and has a battery and a camera, and supposedly you're able to shoot like stories for Instagram on there, but they're noticing after 2 years just 10% or fewer than 10% of the glasses are being actively used by users. Meta sold about 300,000 of these wearable devices, and again, just less than 27,000 people actively use them every month. The active return rate is about 13%. The company is still planning a second generation version of these with a better battery life, which may improve some of the concerns users have with the glasses. Meta also launching an AI tool called AudioCraft to create music from text. The company used their own in-house company-owned, specifically licensed music to allow people to create their own music by simply typing in words. This might seem kind of silly on the surface, but there are some probably social media use cases here in the future, whereas Meta, instead of paying licensing fees or having to get access to music, if you wanted to create a story or a video, now you're going to be able to just maybe type that in, and Meta's going to own that music. There's probably some other use cases here that we haven't even figured out yet. Meta planning to launch an AI bot with different personas in an attempt to retain users. So you'll be there on Instagram, and somebody that talks like Abraham Lincoln will advise you on travel options, and then maybe a surfer will be able to do the same. We'll see if this is nefarious or if this is a legitimate attempt by Meta to add accessibility and usability to its platform. Stuff like this, while it hasn't been necessarily automated or a bot, something like this has been used in the online dating world for years. Moving on to Apple, start of the week at 196, down over 7%. The world's richest company down 7% in 5 days. Finished the week at 182 on the dot. Now, the company reported their earnings yesterday, and they fell flat to impress investors, to say the least. Revenue coming in essentially flat or down year over year, but essentially in line with expectations. The company gave no real significant guidance on the conference call as well, saying that they anticipate the upcoming year, or the upcoming quarter, performance to be similar to what they've seen in the past. Apple is a company, and Apple goes through this, okay? They kind of, stall out, okay? Yeah, and it's a first world problem to stall out at $81 billion in quarterly revenue, but the company's kind of stalling out in terms of innovation, on terms of its designs, in terms of its profit margins, all those types of things. At some point, the company has plenty of cash and plenty of ability to turn that around. Now, the Apple Card, which is a credit card, but also has a high yield savings account attached to that, run by Goldman Sachs, hit $10 billion in deposits, with 97% of people out there choosing to have their daily cash, which as you use your Apple Card, instead of like a normal credit card, you kind of get your rewards maybe like after 30 days or at the end of the month or something. Apple just gives you that daily cash automatically, and you have the option to deposit it directly into a savings account with an APY of 4.15%. Apple probably could take this $10 billion and do something creative with it. Moving on to Amazon, start of the week at 133, boom, up 4.5%, including an 8.3% rise to finish the week. We'll call that at 139.60 at Amazon. The company reported their Q2 earnings yesterday. Revenue in the most recent quarter beating expectation by nearly $3 billion. Year-over-year revenue growth was close to 11%. What was more impressive than that is the fact that their upcoming quarter was expected to be at about $138.29 billion in revenue. And that's more or less the low end guidance that Amazon gave you. They're expecting maybe upside all the way up to over $143 billion worth of revenue. They also gave guidance, which is very impressive, for operating income between $5.5 billion all the way up to $8.5 billion compared to just $2.5 billion a year ago. We pointed it out on our Amazon video, so we won't make a huge deal of it here. But the company's Amazon e-commerce business here in North America printing one of the highest operating profits that it has really since the pandemic. Now, Wall Street obviously lining up as well as they ticked up their revenue estimates over the last day or so. Now that Q3, instead of being at $138 billion and some change, now Wall Street expecting closer to $141. They also gave a lift essentially to the rest of the year for Amazon. The company is setting that ambitious Q3 forecast. They obviously have great visibility into it as you had Prime Day, and this company can more or less kind of see where sales are trending, and they say that AI is at, quote, the heart of what we do over at Amazon, but I would argue that it's going to be North American and eventually international e-commerce operating profit that will send this stock even higher. Forget about AI. If you can turn a single digit, actually a negative margin business, which is online e-commerce retail, if you can start turning in that to low single digit operating profits, and I'm not expecting double digit operating profits from that business unit, but if you can continue to incrementally go that up and combine that with strong revenue growth, well, obviously, that's a recipe for success. India's cricket body is trying to woo Amazon and Google for $750 million media rights. This is an attempt by the cricket's governing agency to get one of these big tech companies to fork over big dollars for likely one of the bigger sporting events inside of the company. AWS launching its infrastructure region inside of Israel, and it's set to invest $7.2 billion through 2037. I think that's what we're going to see with Amazon. They've got enough competition here from a cloud perspective, from an AI cloud perspective, from Microsoft and Google, Oracle, IBM, and some startups, which we'll talk about when we get to NVIDIA, that the real growth it's probably going to be in the international markets. Moving on to Netflix. Start of the week at 430, finished flat at about 431 and some change. Not a ton of news out of Netflix this week. Moving on to NVIDIA. Start of the week at 468, down nearly 4.68%, as this is the last of the FAANG stocks that haven't reported their earnings. Company finished with their shares trading at about 446 at the end of the week. NVIDIA-backed startup raises $2.3 billion in debt backed by NVIDIA chips. So yeah, that's a new one. NVIDIA GPU chips are now being used as collateral to finance a company's debt obligations. This company called CoreWeave, which I wrote about on our blog over at brownstoneresearch.com. We'll touch on another story that we touched on maybe about a month ago. We did a story on CoreWeave, or at least kind of weave them in, if you will, inside of a story. CoreWeave is essentially kind of an upstart cloud provider. They started with crypto mining. They've pivoted into kind of AI cloud hosting. Think of them as maybe kind of a startup competitor to an AWS, a Microsoft Azure, or a Google Cloud. NVIDIA's playing ball. They are an equity-based investor in CoreWeave, which is a private company. And not only that, they are funneling them GPUs at a rate that outpaces, from according to my sources, actually outpaces Amazon, Google, and potentially Microsoft as well. The company obviously needs a boatload of cash to be able to pull this off, and they borrowed $2.3 billion using the GPUs that they have at its headquarters as collateral. Certainly a new one to me, but if we think about this, take it like an extra step. Well, wait a second. If you can use your data center as collateral for loans, what kind of money could Google, Amazon, and Microsoft be borrowing at in the future. Chip design firm ARM is set to target a $60 billion IPO next month. This is also a company that we talked about in our Brownstone research. I'll give you the TLDR. I would not be buying this stock, and I'm referring to ARM at the current time, ARM. Company should go public here within the next probably 30 to 60 days. Wouldn't be a stock I would run out and buy. First of all, they're essentially married to the smartphone market, and the smartphone market, as you can see with Apple, not necessarily doing roses and sunshines at the current time. And you also have this trend, which I pointed out back in June on my blog, that you have an open source, essentially a pretty close competitor to what ARM is doing. It's called RISC-V, RISC-V. This is a reduced instruction set chip that allows you to avoid different types of licensing fees with ARM and gives you a lot of flexibility if you are a chip maker. And my guess, as ARM decides to go public, the more they're going to need to pump up those financials, the more it's going to push chip makers or chip designers onto the RISC-V architecture. You heard it here first. Moving on to Google. Start of the week at 133 and some change, slid down about 3.7% to finish the week at 128. Google wins some limits to an antitrust case over its default search deals. This seen more as procedural rather than something that will maybe tip the tides into Google's favor. They will likely have their corporate lawyers working overtime in this one in some kind of settlement. Now, we talked about this when we discussed Amazon, but Google also being wooed by India's cricket body to pay upwards of $750 million for the media rights to one of their country's largest sporting events. Now, moving on to Microsoft, started the week at 337 and some change, down over 2.8% to finish the week at 327. Not a ton of news out of Microsoft this week. Moving on to Tesla, started the week at 266. This stock also down over 4.6% to finish the week close to $253 per share. Tesla's China deliveries came in and they were not good. They fell to a 2023 low in the month of July, although there is probably some nuance to this type of press release. I know the company talked about on their most recent conference call that they're doing some new tooling, and also there's evidence that they're kind of retooling the Model 3, I believe, in China, and they're already kind of rolling that out, not sitting here trying to make excuses for Tesla, but my guess is you probably did see some demand destruction, but some of it could be internal manufacturing related as well. Tesla facing a NHTSA probe over a steering control issue. 12 separate complaints have been filed of a sudden loss of power steering assistance as you were driving a beautiful Tesla car. Of those complaints, 5 pointed to a complete inability to steer. There is one crash connected to the issue. This would impact as many as 280,000 cars if it required a physical fix where you had to actually take it into the Tesla shop. This would be certainly detrimental to the share price. If it was another one of those over-the-air fixes that Tesla could implement, it wouldn't mean a whole lot. Moving over to the technical segment of the show, we do finally have a pretty meaningful, and I would hesitate to call this a reversal quite yet, but you definitely have a reversal here. Now, we probably thought it here as well, and maybe here, but we've pulled back down into our range. Absolutely, I'm telling you right now, absolutely nothing to worry about. If the S&P 500 continues to walk down into this range, folks, this is an uptrend. This area should be bought. It doesn't mean it's blindly bought. It doesn't mean you buy like naked put options kind of buying. It doesn't mean you YOLO and you quit your job. No, you have stop losses set somewhere underneath maybe these lows, risky down at these lows, just in case. Again, what could potentially be forming with the S&P 500 is you had a high back here in December, and now you've just completed another lower high, and you're going to chop lower in that formation. Now, we're talking about way too early to decide if that is the case. But if you're worried about downside risk, that is something to think about, that maybe potentially we've made a lower high from this group and we're starting a much longer term leg down. Some people from a fundamental and maybe even a technical perspective would argue that. Now, what is more relevant is the fact that we are still locked in an uptrend that has been going on for almost a year now. And so that is long enough to where when these markets continue to pull back, they can be bought. I think the lower probability is that we reverse and go higher here. But again, I think I've been saying that for 2 months and the markets have just gone higher. Moving on to Meta, not quite the reversal or the break that we'll see. You'll see it here with Apple. It'll be very clear when we get to Apple. No break of trend quite yet, although the trend is very steep with Meta. And again, when we break trend, it's not if, it's when we break trend with Meta, it's actually healthy and it's actually good. There's a gap here in the chart. Now we've already filled it, but there's a comfortable area of consolidation that I'll surround or I'll kind of sandwich with 2 purple lines. That is not a bad area to start, quote, buying the dip with Meta. Again, wouldn't do it with both feet, wouldn't do it with like naked options. I wouldn't do it with all my money. But if you've been sitting on the sidelines, make the decision now, okay? Because you've sat on the sidelines for like a 300% rally with Meta. You've sat on the sidelines for like a 1,000-point move on the S&P 500, okay? You've been paralyzed. Make the decision now. If you learn anything from this video, anything from me, make the decision to buy now, because I promise you, as these markets pull back, the talking heads get on TV and everything will look bad, okay? Credit down rates, interest rates, all this type of stuff, recession, double dip, everything. They'll just bring out every term and they'll make you fearful again and you won't buy it. And so that is why you have to make that decision now. Make it with Meta. Start picking out these levels. We don't just do these charts just for fun. Believe me, these are to help you pick out these levels. Now, clearly, absolute stone cold clearly, we've broken trend as it relates to Apple. So this steep uptrend that we were in is pretty much dead gone. Now, I'm going to put that purple line back on because, forgive me, I'll get a little technical here. We've created a gap in the chart. Again, those tend to fill. And what we see, and again, this is not necessarily the high probability outcome, but this is an outcome, is that Apple actually retraces and retests this purple line. It's often the moment where the bulls, which have been in charge of these markets for almost a year now, this is when they say, oh, psych, it was just a temporary drop, but it's a back test here to only then a resumption of another leg lower. Something to just keep in mind, particularly as it relates to Apple, since it's going to trade so closely to the S&P 500. This thing tends to trade in a slightly more perfect technical pattern. You have some levels here with Apple that really start at like 179. So we're close. If you're like one of these investors that kind of regularly, like invest or whatever, I guess it doesn't really matter. But this is an area where if you're just normally regularly investing, or if you want to buy Apple 2 or 3 times a year just to kind of keep its allocation up, these are areas where it's okay. I think better opportunities, obviously, will materialize south of that. Moving over to Amazon, which created the reverse pattern. Instead of gapping down, we actually gapped upwards on Amazon into an area of resistance, which we've had marked out here on the channel for a while. It's really more or less kind of a range slightly below here, all the way to about where the stock finished the day, or maybe not quite that high, but we have some overhead resistance up here at about 145. Wouldn't surprise me if Amazon continues to walk up that path to 145, meet some resistance, pull back again, similar to most of these stocks. Those pullbacks can be bought. Same with Netflix. Moving up the channel, we're essentially in the middle of the channel. This area can be bought lower at 384, can be bought as well. NVIDIA doesn't report for another almost 3 weeks. They report on August 23rd or thereabouts, and it is just hovering up at the top of the channel. People don't really know what to do with this. You're not really selling it. You're not really buying it. And we'll obviously wait and see with NVIDIA if their partners are able to leverage the GPU chips for $2 billion loans. I think that gives you a clue on how well NVIDIA's business is going to be doing in about 19 days. Moving on to Google, this one still looking good, sitting on an edge of support here, right where the stock is, about 128. You'd like to see it hold there for a while, continue to resume an upper trend that we've kind of been making here. A break down from there really isn't concerning, and in fact, should probably be bought. Moving on to Microsoft, more or less an advanced stage of a pullback. We'll see if this one gets deeper. The first area that looks just kind of interesting is a little bit lower at, we'll call it about 318, even deeper than that. Kind of south of 300, we'll start kind of pounding the table, if you will, on Microsoft. And then finally, Tesla. No concerns here. Technically, you'd like to actually see this one pull back to this kind of 210, 211, 215, maybe as high as 220 area. This, again, everybody's going to have this area marked out, but that is a fantastic area from both probably a longer term perspective, but shorter term, I actually really like it because you could put a stop loss like just underneath that, because you would be breaking kind of this orange higher highs, higher low trend. You'd be breaking sideways consolidation. You'd be breaking through like a back test to the lower trend. I mean, you'd be breaking like 3 different levels if you break through this. More technically, you wouldn't want to get below these lows that you made back here at about 178. I could see somebody that wants kind of one of those shorter term things with Tesla. You know, you buy it here at, we'll call it 210, your stops at 180, and your upside is probably back up to 330. Not sure if the risk reward on that is fantastic, but this is a stock with a lot of options, activity, and premium that you might be able to capture. Hopefully you guys enjoyed today's video. We'll be back again next week. Enjoy your weekend and good luck with your investments.